Projected 35% revenue increase in semiconductor, automotive, and healthcare sectors by Q2 2026. Date: February 14, 2025. Events summary. The semiconductor, automotive, and healthcare sectors are set to experience a remarkable revenue increase of approximately 35% by Q2 2026. This growth is anticipated to be fueled by advancements in generative AI, rising semiconductor demand across various applications, and a resilient market environment. The following report outlines key insights, data trends, and projections driving this forecast. Key insights and data. 1. Semiconductor industry growth. The semiconductor sector witnessed a significant surge in 2024, with global sales reaching $627.6 billion, marking a 19.1% increase from $526.8 billion in 2023. Projections indicate that sales will rise to $697 billion in 2025, with an ambitious target of $1 trillion by 2030. Drivers of growth. The demand for generative AI chips is a pivotal factor, with sales projected to exceed $150 billion by 2025. Deloitte. 2. Automotive sector demand. The automotive industry is expected to thrive due to enhanced semiconductor integration, especially in electric vehicles, EVs, and smart technologies. The anticipated revenue increase is driven by a growing demand for advanced driver assistance systems, ADAS, electric powertrains, connectivity features that require sophisticated chips. 3. Healthcare innovations. The healthcare sector is also poised for a substantial revenue increase driven by innovations in telemedicine, AI-driven diagnostics, connected medical devices. The integration of advanced semiconductor technologies is essential for developing devices that improve patient care and streamline operations. Common key points. Generative AI influence. All reports underscore the crucial role of generative AI in driving semiconductor demand, with a significant share of revenue attributed to chips designed for AI applications. Global market trends. The Semiconductor Industry Association (SIA) emphasizes a robust global market outlook, predicting that North America, particularly the U.S., will triple its domestic chip manufacturing capacity by 2032. This move aims to strengthen supply chains and meet surging demand across various sectors. Economic factors. The semiconductor market is also influenced by economic conditions such as rising interest rates and geopolitical tensions, which could impact supply chains and manufacturing capabilities. Differences between sources. Focus areas. Deloitte's analysis covers diverse aspects of the semiconductor industry, including talent shortages and geopolitical challenges. In contrast, SIA provides a concise overview focused primarily on sales figures and market trends. Projection specifics. While both sources agree on strong growth, Deloitte offers detailed breakdowns of market segments, highlighting the role of generative AI chips, whereas SIA emphasizes overall sales figures and growth percentages without segment-specific insights. Timeline of events. 2023. Semiconductor sales totaled $526.8 billion, establishing a foundation for significant growth. 2024, the industry experienced a 19.1% sales increase, reaching $627.6 billion. Demand for AI chips surged, contributing to overall growth. 2025. Projections suggest sales will increase to $697 billion, with generative AI chips expected to generate over $150 billion in sales. 2026, a 35% revenue increase across semiconductor, automotive, and healthcare sectors is anticipated, alongside ongoing advancements in AI technology and semiconductor applications. Sector-specific insights. Semiconductor sector. The semiconductor industry has shown resilience and growth trajectory, fueled by the demand for generative AI chips. The sector is expected to face challenges such as talent shortages and geopolitical tensions, but overall the outlook remains positive. Automotive sector. The automotive industry's shift towards electric and smart vehicles is expected to drive semiconductor demand. Innovations in vehicle technology will necessitate advanced chips, further bolstering revenue growth. Healthcare sector. The rise of AI in healthcare, particularly in diagnostics and patient management, will drive semiconductor demand for connected medical devices. The sector is set to benefit significantly from technological advancements in telemedicine and AI applications. Challenges and considerations. Talent shortages. The semiconductor industry faces a pressing need for skilled workers, with estimates suggesting the industry requires adding over 1 million skilled workers by 2030. Companies will need to invest in workforce development and training initiatives to address this gap. Geopolitical risks. Ongoing geopolitical tensions and export restrictions may complicate supply chains. Companies must remain agile and adapt to changing regulations and market conditions. Economic conditions. The semiconductor market is sensitive to fluctuations in economic conditions, including rising interest rates and supply chain disruptions, which may impact growth projections. Looking forward. As we approach Q2 2026, the semiconductor, automotive, and healthcare sectors are well positioned for significant revenue increases. The confluence of advanced technologies, particularly generative AI, will drive demand for semiconductors across these industries. However, challenges such as talent shortages and geopolitical tensions must be navigated to sustain this growth trajectory. The collective forecasts underscore a robust market outlook, although companies must remain vigilant and adaptive to the evolving landscape of technology and economic conditions. This report highlights the anticipated growth patterns and critical factors influencing the semiconductor, automotive, and healthcare sectors, illustrating a future shaped by innovation and technological advancement. Counterintuitive insights from projected revenue increases in semiconductor, automotive, and healthcare sectors. 1. High revenue growth amid market saturation. While it is generally expected that mature markets will experience slower growth rates, the semiconductor, automotive, and healthcare sectors are projecting significant revenue increases of about 35% by Q2 2026. This growth appears counterintuitive, as these industries have been seen as approaching saturation points. The surge is driven primarily by advancements in generative AI and the increasing integration of sophisticated technologies, which contradicts the common expectation that saturated markets yield only incremental improvements. 2. Declining wafer shipments despite revenue increases. It's notable that while revenue from generative AI chips is expected to soar, the actual silicon wafer shipments are projected to decline. In 2023, nearly 1 trillion chips were sold at an average price of 61 cents each, but generative AI chips, though they accounted for about 20% of revenue, represented less than 0.2% of total wafers. This disparity suggests that high revenue is being driven by a smaller number of high-value chips rather than a broad increase in chip production, challenging the usual correlation between production volume and revenue. 3. Increased R&D spending versus slower EBIT growth. The semiconductor industry is investing heavily in research and development, with R&D spending projected to account for 52% of earnings before interest and taxes (EBIT) by 2024. This is a stark increase from 45% in 2015, indicating that while companies are investing more in innovation, the growth of their profits is lagging behind. This situation raises questions about the sustainability of such a high investment rate in R&D when the returns in terms of EBIT are not keeping pace, suggesting a potential over-reliance on innovation without immediate financial benefits. 4. Consumer electronics demand versus AI chip growth. The smartphone and PC markets are experiencing relatively flat growth, yet the demand for generative AI chips is expected to significantly drive the overall semiconductor market. This juxtaposition is counterintuitive. Traditionally strong consumer electronics sales have been a primary driver of semiconductor growth. The current trend indicates a shift where AI technology is becoming the primary growth driver even as traditional markets stagnate, suggesting that the semiconductor landscape is evolving away from classic consumer electronics dynamics. 5. Global market trends versus regional declines. While the global semiconductor sales are projected to grow, certain regions like Europe and Japan are experiencing declines. This disparity highlights a counterintuitive situation where the overall market outlook remains positive yet specific regions are struggling. This could indicate a shift in global supply chain dynamics favoring regions that can better adapt to the rapidly changing technological landscape, particularly in AI, suggesting that regional capabilities and strategic positioning are becoming more critical than overall market trends. 6. Talent shortages amid industry growth. The semiconductor industry faces a significant talent shortage, with projections indicating a need for over 1 million skilled workers by 2030. This situation seems counterintuitive given the industry's high growth projections. Typically, one would expect that robust growth would attract talent. However, the complexity of the industry, combined with an aging workforce and geopolitical challenges, is creating a paradox where demand for skilled labor is increasing even as the supply dwindles, complicating growth trajectories. 7. Geopolitical tensions versus supply chain resilience. The semiconductor industry's growth is projected amidst significant geopolitical challenges such as U.S. export restrictions and tensions with China. Although these factors would typically suggest a decrease in growth potential due to supply chain disruptions, the industry is expected to adapt and thrive. This resilience is counterintuitive as it suggests that companies can navigate substantial external pressures effectively, possibly indicating that the industry's adaptability is stronger than previously believed. 8. Increased focus on sustainability amid high demand. As demand for advanced AI chips surges, the industry is also facing increasing pressure to address sustainability concerns, particularly regarding power consumption and material sourcing. The expectation that high demand would overshadow sustainability initiatives is challenged by the industry's simultaneous commitment to environmental responsibility. This reflects a counterintuitive trend where sustainability is being integrated into growth strategies rather than being sidelined. 9. Emergence of friendshoring as a strategic advantage. The concept of friendshoring, sourcing materials and labor from allied countries, gaining traction amidst geopolitical tensions, is surprising. Traditionally, companies have sought the lowest cost options regardless of geopolitical context. The shift towards establishing resilient supply chains through partnerships with allied nations suggests a new strategic approach that prioritizes security over cost, indicating a significant shift in how global supply chains are managed. 10. AI chip market versus traditional chip markets. The distinction between AI chips and traditional semiconductors is becoming increasingly pronounced, with the expectation that AI chips will dominate sales in the near future. This divergence is counterintuitive as it indicates a bifurcation in the semiconductor market where traditional products may struggle to compete against the high-growth AI segment. This trend implies that companies may need to pivot quickly to remain competitive, highlighting the rapid evolution of market demands. These counterintuitive insights illustrate the complexity and evolving nature of the semiconductor, automotive, and healthcare sectors amid advancing technologies and changing consumer demands. The projections of significant revenue growth come with caveats that reflect a nuanced understanding of market dynamics, highlighting the importance of adaptability and strategic foresight in navigating future challenges. Important content that may be overlooked in the report. While the report provides a comprehensive overview of projected revenue increases across the semiconductor, automotive, and healthcare sectors, there are several nuances and implications within the data that many readers may overlook. These details are significant as they provide deeper insights into the future landscape of these industries, the challenges they face, and the broader economic context. 1. Generative AI chips and their market dynamics. One of the most critical aspects that could be overlooked is the specific impact of generative AI chips on the semiconductor market. The report mentions that generative AI chips are expected to account for over $150 billion in sales by 2025, representing a significant share of the total semiconductor revenue. However, it is essential to recognize that while the revenue from generative AI chips is substantial, they represent a small fraction of total chip shipments. In 2023, generative AI chips made up less than 0.2% of total wafers produced, indicating a potential supply-demand mismatch. Significance: this discrepancy highlights that the growth in revenue does not necessarily correlate with an increase in volume, which could lead to capacity issues and inefficiencies in production. Companies focusing solely on revenue generated from high-value AI chips may overlook the operational challenges associated with maintaining wafer supply and optimizing overall production capacities. 2. Talent shortages and workforce development. The report underscores a looming talent shortage in the semiconductor industry, projecting a need for over 1 million skilled workers by 2030. While many may acknowledge this challenge, the broader implications for innovation and competitiveness are often underestimated. The aging workforce and insufficient educational outputs in relevant fields compound this issue. Significance: the ability of semiconductor companies to innovate and keep pace with technological advancements is directly tied to their workforce. A lack of skilled labor can stifle growth, hinder R&D efforts, and ultimately affect market leadership. Companies may need to rethink their talent acquisition and development strategies, including partnerships with educational institutions to create tailored training programs, which is a long-term investment that can strengthen their position in a competitive market. 3. Geopolitical risks and supply chain resilience. The report discusses geopolitical tensions and their impact on supply chains, particularly in light of export restrictions and trade wars. However, the potential for supply chain diversification and the shift towards onshoring and friendshoring are crucial elements that may receive insufficient attention. The concentration of semiconductor manufacturing in specific regions such as South Korea for drone production poses risks, especially as global tensions rise. Significance: companies must prepare for potential disruptions not only from geopolitical factors but also from climate-related events that can impact supply chains. A diversified supply chain strategy that includes multiple geographical sources for critical materials can mitigate risks. The proactive approach to managing these risks can enhance resilience and ensure that production continues smoothly even amid political or environmental upheaval. 4. Economic conditions and their impact on market dynamics. Throughout the report, economic conditions such as rising interest rates and inflation are mentioned as factors influencing the semiconductor market. Yet the specific implications these conditions pose for consumer demand in sectors reliant on semiconductor technology could be more thoroughly explored. For instance, how might increased costs affect consumer spending on automotive technologies or healthcare innovations? Significance: a nuanced understanding of the interplay between economic conditions and consumer behavior can help companies strategize better. For instance, automotive companies reliant on semiconductor chips for electric vehicles (EVs) may face shifting consumer priorities if costs rise, potentially slowing the adoption of EVs. This could necessitate adjustments in production plans and pricing strategies, as well as increased focus on cost efficiency and innovation. 5. The rise of agile startups in the semiconductor space. The report briefly mentions the competitive landscape, hinting at the rise of agile startups in the semiconductor industry. However, the implications of this trend deserve more focus. Startups often bring innovative approaches and technologies that challenge established players and can significantly disrupt market dynamics. Significance: incumbent companies may find themselves at risk if they do not adapt quickly to the innovations brought forth by these startups. This could lead to increased mergers and acquisitions as larger firms seek to bolster their capabilities by acquiring cutting-edge technologies. The potential consolidation in the industry could also impact market competition, pricing, and the pace of technology advancement. 6. Long-term implications of advanced packaging technologies. The report touches on the growth of advanced packaging technologies such as TSMC's CoWoS chip-on-wafer-on-substrate, predicting substantial increases in production capacity. However, the broader implications for chip design and performance, as well as the competitive positioning of firms utilizing advanced packaging, are worth a deeper exploration. Significance: advanced packaging can enhance performance and enable more complex chip designs, leading to innovations across various sectors including telecommunications and consumer electronics. Companies that adopt these technologies early may gain a competitive edge in delivering high-performance products. Moreover, the ability to innovate at the packaging level can be as crucial as the chip design itself, influencing everything from thermal management to power efficiency. 7. Impact of sustainability initiatives on the semiconductor industry. While the report primarily focuses on growth projections, the ongoing shift towards sustainability in manufacturing practices may be underemphasized. As environmental regulations tighten globally, semiconductor companies will need to consider how sustainability initiatives will impact their operations costs and market positioning. Significance: companies that proactively integrate sustainability into their business models may not only comply with regulations but also appeal to environmentally conscious consumers and investors. This can create new business opportunities and enhance brand reputation, positioning these firms favorably in the eyes of stakeholders. Conclusion. In conclusion, while the report outlines an optimistic growth trajectory for the semiconductor, automotive, and healthcare sectors, it is essential to recognize the nuances and potential challenges that lie beneath the surface. Addressing talent shortages, managing geopolitical risks, understanding economic factors, and embracing innovation and sustainability will be crucial for companies aiming to capitalize on the projected revenue increases. By focusing on these often overlooked elements, stakeholders can better navigate the complexities of the market and position themselves for long-term success. 1. Projected semiconductor industry growth. The semiconductor sector is anticipated to experience robust growth, with global sales reaching $627.6 billion in 2024 and projected to grow to $697 billion in 2025. This growth is driven primarily by the demand for generative AI chips, which are expected to generate significant revenue, estimated at over $150 billion by 2025. The industry's trajectory suggests it could reach a $1 trillion valuation by 2030, necessitating a compound annual growth rate of 7.5%. 2. Automotive sector integration. The automotive industry is witnessing increased integration of semiconductors, particularly in electric vehicles (EVs) and advanced driver assistance systems (ADAS). This surge in demand for sophisticated chips is pivotal for the development of smart technologies and electric powertrains, reflecting a broader shift towards more technologically advanced vehicles. The anticipated revenue growth in this sector underscores the automotive industry's transformation and reliance on semiconductor advancements. 3. Healthcare innovations and revenue growth. The healthcare sector is projected to benefit significantly from innovations in telemedicine, AI-driven diagnostics, and connected medical devices. The integration of advanced semiconductor technologies is essential for the development of devices that enhance patient care and streamline healthcare operations. As the healthcare sector evolves, the revenue increase attributed to these innovations highlights the critical role that semiconductors play in improving health outcomes. 4. Global market trends and challenges. Despite the positive outlook for growth, there are underlying economic factors affecting the semiconductor industry, including rising interest rates and geopolitical tensions. These factors could potentially disrupt supply chains and impact manufacturing capabilities. The emphasis on regional manufacturing, particularly in the U.S., highlights a strategic shift to bolster domestic production and reduce reliance on global supply chains, ensuring resilience amid geopolitical uncertainties. 1. The Industrial Revolution, late 18th to early 19th century. The Industrial Revolution marked a significant turning point in history, transitioning economies from agrarian-based systems to industrialized ones. Innovations in technology. such as the steam engine and mechanized manufacturing processes, led to unprecedented increases in productivity and economic growth. Industries like textiles and iron production saw massive expansions similar to the projected growth in semiconductors and other tech sectors. The rise of factories transformed labor dynamics, urbanization trends, and fundamentally reshaped society, not unlike the current transformations driven by AI and advanced technology in various sectors. 2. The dot-com bubble, late 1990s to early 2000s. The dot-com bubble was characterized by a rapid rise in equity markets driven by investments in internet-based companies and technologies. This period saw explosive growth in the technology sector as businesses and consumers rapidly adopted new digital platforms and services. The eventual bust in 2000 led to significant losses but also laid the groundwork for the modern tech landscape, fostering resilience and innovation in future technologies. The current wave of advancements in generative AI and semiconductors reflects a similar trajectory of growth, optimism, and the potential for market corrections as the sectors mature. 3. The rise of renewable energy, late 20th century to present. The shift toward renewable energy sources, including solar and wind power, has been driven by technological advancements and a growing awareness of environmental issues. This transition has seen significant investments and revenue increases in the energy sector, paralleling the projected growth in semiconductors, automotive, and healthcare industries. As electric vehicles and smart technologies gain traction, the demand for energy-efficient solutions and advanced semiconductor technologies will likely mirror the trends seen in renewable energy adoption, leading to transformative impacts on economies and industries. The outlook for the semiconductor, automotive, and healthcare sectors is promising, with projections indicating a substantial revenue increase of approximately 35% by Q2 2026. This growth is largely attributed to advancements in generative AI, escalating demand for semiconductor chips across various applications, and a generally robust market environment. Semiconductor industry growth. The semiconductor industry has shown remarkable resilience and growth in recent years. In 2024, global sales soared to $627.6 billion, marking a 19.1% increase from 2023. The trend is expected to continue, with projections estimating sales to reach $697 billion in 2025. The overall trajectory points towards a target of $1 trillion by 2030, driven primarily by the growing demand for generative AI chips, which are anticipated to generate over $150 billion in sales by 2025. This segment is critical as it encompasses a variety of chip types, including CPUs, GPUs, and specialized AI processors. Automotive sector insights. The automotive industry is also poised for significant growth, particularly as the integration of advanced semiconductor technologies becomes more prevalent in electric vehicles, EVs, and smart technologies. The demand for features such as advanced driver assistance systems, ADAS, and connectivity solutions is rising, necessitating sophisticated chips that can support these innovations. As the automotive sector transitions towards more electrification and automation, the reliance on semiconductors will only intensify. Healthcare innovations. In the healthcare sector, advancements are being propelled by innovations in telemedicine, AI-driven diagnostics, and connected medical devices. The integration of advanced semiconductor technologies is crucial for developing new healthcare devices that enhance patient care and operational efficiency. This sector is expected to benefit significantly from the overall increase in semiconductor revenues, as the demand for high-tech medical solutions continues to grow. Common themes across sectors. 1. Generative AI's influence. The pervasive influence of generative AI is a recurring theme across all three sectors. The demand for specialized chips designed for AI applications is a primary driver of growth, leading to substantial revenue contributions from this segment. 2. Global market trends. An optimistic global market outlook is underscored by the anticipated tripling of U.S. domestic chip manufacturing capacity by 2032, which aims to bolster supply chains to meet rising demand. 3. Economic factors. Despite the positive trends, the semiconductor market remains susceptible to economic fluctuations, including rising interest rates and geopolitical tensions, which could impact supply chains and manufacturing capabilities. Challenges and risks. While the future appears bright, several challenges loom on the horizon. Talent shortages. The semiconductor industry faces a significant talent gap, with estimates suggesting the need for over 1 million skilled workers by 2030. This shortage could hinder growth if not addressed through targeted workforce development initiatives. Geopolitical concerns. Ongoing geopolitical tensions, particularly between major economies, could disrupt supply chains and impact manufacturing. Export restrictions and trade tensions may complicate relationships between chip manufacturers and their clients. Market cyclicality. The semiconductor industry is historically cyclical, with periods of rapid growth followed by downturns. While the current outlook is positive, past trends suggest caution in long-term planning. Strategic considerations. As companies navigate these challenges, several strategic actions can be considered. Investing in R&D. Increased investment in research and development is crucial for maintaining competitiveness, particularly in the fast-evolving AI landscape. Companies should focus on innovation to create specialized and efficient chips. Building resilient supply chains. Companies need to diversify their supply chains to mitigate risks associated with geopolitical tensions and natural disasters. Strategies may include reshoring or nearshoring manufacturing capabilities. Enhancing collaboration. Strengthening partnerships across sectors can facilitate the sharing of resources and knowledge, driving innovation and efficiency. Conclusion. The projected 35% revenue increase in the semiconductor, automotive, and healthcare sectors by Q2 2026 reflects a robust market environment fueled by advancements in technology and a growing reliance on semiconductors. Companies must remain vigilant and proactive in addressing challenges such as talent shortages and geopolitical risks, while capitalizing on opportunities presented by generative AI and other emerging technologies. By strategically navigating this landscape, businesses can position themselves for sustainable growth and success in the coming years.